Hi YouTube, this is Christian Brindle, Medicare Health Plan Expert and Specialist located about 20 minutes outside of Salt Lake City, Utah. And today, we're bringing you another Medicare supplement breakdown, deep dive if you will, for another state. We have recently taken the steps to add West Virginia and Alabama to the states that we are able to service. Now, so once that processes, it's still in the works, but once that processes, we'll be able to offer Medicare supplement plans to people in 12 states. We've done them in a lot of different markets here. And people have seemed to enjoy the videos, the ones we've done for Texas, Florida, Utah, which is our home market, California. So we thought we'd do one today for West Virginia. As if this is your first time watching one of our videos and you're not familiar with what a Medicare supplement plan is, a Medicare supplement works basically like this. Medicare acts as your primary, so Medicare Parts A and B through the government, which they work like two pieces of a puzzle that fit together to give you medical coverage. They pay about 80% of your medical bills, and they leave 20% behind. So a Medicare supplement is a plan through a private insurance company, a secondary insurance, if you will, and it's going to come through and pay the 20% that Medicare leaves behind. And so essentially, folks, Medicare supplement plans are the same everywhere. Their plans are designed by the government in terms of how much of the 20% that Medicare leaves behind the plan will pay. But the plans are designed by the government and they're named after letters. So that's why we have plans like Plan G, Plan N, Plan F, Plan K, Plan L, Plan M, Plan F. I think I already said Plan F. And so basically every insurance company in probably 99% of all the states offer the exact same Medicare supplement plans. They just all charge a different price. And then they also all have different price increases going forward. So without further ado, let's just jump into West Virginia and kind of see who is competitive there in that market as of this very moment. This video is being recorded at the very end of August of 2020. So if you're watching this maybe 2021, the prices might be a little different. So just please keep that in mind. We're going to be looking at a Plan G, which I think is probably the most popular plan we have in the industry today. A Plan G pays everything that Medicare leaves behind, with the exception of what's known as the Medicare Part B deductible, which, as I talked to you about this in 2020, is $198 one time per year. So that's basically what we're looking at with that. So let's take a look at that. We'll be looking at all the other videos we did. We started out with a female who's turning 65. We're looking at Athens, West Virginia. Just pulled a zip code up just to kind of give us an idea. Now let's kind of see what we're looking at here. Now this quoter will show me every single insurance company in the entire market here. So I always like to look at the market analytics to kind of see the company's rate increases. So it looks like the cheapest plan right now that you can get a Plan G, the cheapest insurance company is the Manhattan Life Insurance Company. But one thing I'm always looking at is they just started this line of products, it looks like 7/1 of 2020. They have no rate increase history. So I don't like to see that as much. I also don't like to see quite as much their AM Best rating not being anything higher than a B+. AM Best basically is a company that rates the financial stability of an insurance company. And so that has a lot to do with, in my opinion, sometimes it can have something to do with their ability to spread risk around. So that the cheapest isn't always the best in terms of rate increases. You can find an insurance company that can go up 2, 3, 4, 5% a year for a couple of years, or you can have one that goes up 10 to 15% a year, and that can make a very big difference over the long term of your plan. The next up is the Capital Life Insurance Company, but they just started January of this year. They don't have a rate increase history either, and I don't like their AM Best rating either. So that gives me a little bit of cause to pause. Heartland National, I know, is a company that a lot of people have been very excited about the last couple of years. They had their first rate increase in this market, it looks like 6/1, 1.4%. I like that, but this is one thing I don't like. It looks like in the state, as of 2019, so last year, they only had 10 insured people. So what that tells me is if 3 of those people, let's say, have monster claims and they have a lot of health problems, there's not a whole lot of risk to spread around. Now, of course, that's a higher amount, probably in 2020, but just one thing to keep an eye on, And they don't have an AM Best rating, at least at this time, so a couple of interesting Lumadopes. Lumico, looks like they came in the market about 2 years ago. They have a 5% rate increase. My whole thing with this company is probably just the size, 87 people in the state as of last year. But they do have a higher AM Best rating, so there is that. Union Security, they have the B plus AM Best rating. They don't have really the size, so they might have a 4% rate increase for 1 year, but we don't have multiple years to look back. And the size is a thing that I try to look at. I like to work with bigger companies because I feel more confident. Atlantic Coast, B plus plus, same thing. They just started their product line. It looks like 3/1 of this year in this market, so don't have a lot of history there. Here's AARP, probably the biggest insurance company nationwide that offers Medicare supplements, which is basically the AARP is a sponsor. The plans are coming from United Healthcare. So they've had a Plan G in this market for, it looks like, about 3 years, but they've had supplements for 22 years. So they might have been offering a Plan N or an F before that. Now they have 35,000 people insured, which is 42% of the market as of 2019. That's a lot of people. So they can spread risk around very nicely, and as of last year they have 4.1 million policyholders, so they have 30% of the market nationwide. That gives me a lot of confidence in terms of their ability to spread risk around, and maybe 1 or 2 people having a lot of chronic problems isn't going to make them raise everybody's rates, because that has a lot to do with rate increases for Medicare supplements. It's based on a couple different things, but part of it is what's known as the community rate increase. The community rate increase basically means that if 10 people are on a plan and half of them get really sick, everybody's plan rates go up based on the average of the claims for everybody else, even if the remaining 5 people don't even use the plan. Now, this is one thing I love about United. Last 2 years, they've lowered the price. Check this out. So in January 1st of 2019, they went down 5.1%, and then January 1st of 2020, they went down 14%. Not going to find that too many places. Prosperity Life Group, I don't like to see 8% rate increase, for one, but there's some things here I like that I like a little bit more than some of the companies we looked at previously. National Health, which is the National General Company, the size is probably what would worry me more than anything, and the 8% was their last rate increase, but they haven't had one since. Renaissance, very new, looks like, to the market. Don't know if there's enough history there for my liking. National Guardian, they look okay. They don't look too bad. I've never heard of this company. Size is the first thing that comes up, but I like that their AM Best rating is at least at A-, but they just had a 9% rate increase, but that could be due to COVID. I think some companies have had higher rate increases this year than years past because of COVID. There's not much we can do about that. Combined Insurance, I'm not sure I'm familiar with this one either, but that looks, wow, they look very, very promising. Very promising in terms of they have a long history. From 2015 to 2020, only a 1.9% average over that time span, which is very impressive. And they have an A+ rating with AM Best. If I had to nitpick one thing I don't like is they don't have a huge market share, but impressive. American Continental, which is a Aetna senior company. I like them. I've had really good experience with them, but I'd like to see under 5%, but I think over the long haul, if you gave me from 2020 to 2030, I think you'd probably have lower rate increases with them than you would with a lot of companies. They're very big nationwide, and obviously the Aetna is now owned by the CVS Corporation, which is a monster company. They're just huge. Thrivent, I mean, they're more of a niche plan, in my personal opinion, more than anything, but Assured Life, long history there. This is very impressive. But they had this huge price reduction in 2014, and that drags this down quite a bit, but still very impressive. But the last 2 years, 2 rate increases they've had are a little bit higher. Not a whole lot of people in the state at only 193 on their plans, so if I had to nitpick there. GTL, Guaranteed Trust Life, their most recent rate increase was 12%. Don't love to see that. Individual Assurance, looks like they were good for a number of years, but the last rate increase they had was 15%, so that could potentially be a sign of things to come. AM Best ratings under A-, so don't love to see that. Bankers Fidelity, most recent rate increase they had was 11%, but that was in 2019. Very interesting. United World, which is owned by the Mutual of Omaha group, they kind of have a reputation though for having some of those little bit of higher price increases. As you can see, the most recent one they had was 10%. Never want to see 10%. Want to always see single digits at the very least. Americo, 7.5%. Only 18 people insured though as of 2019. That's something I'd be worried about. Bankers Fidelity, looks like it's a relatively newer product in the market, but they have quite a bit of people on the plan, so who knows there. Cigna, American Retirement. So I like Cigna a lot as a company, but this is what I don't like. Last couple of years, they've been bad on the rate increases. Like 11/1, 2019, which is probably when we can expect to see the 2020 rate increases, went up 15% last year, and the year before that, 10.5%. Don't like that. I really don't like to see that. Another Americo company, 7.5%. Highmark, West Virginia, Blue Cross Blue Shield. So this is interesting. Looks like they have a lot of market share, pretty decent, 8.5% as of last year, which is impressive. On this particular product line, 1.9%, and they have a good AM Best rating. Typically, the blues aren't going to look too bad on those kind of things. Another Bankers Fidelity company. So last year, 15.8% rate increase. I don't like to see that. And the further we go, the more expensive these are going to get. Another Bankers Fidelity company, Medico, so 9% the last 2 years. Don't like to see that trend very much. United American, they've been around forever. Very old, a very tried and true insurance company. Nice, 1.9%. But at this point, we're starting to get into prices that are a little bit higher than what we saw when we first started. And more of the Blue Cross. I think you folks kind of get the picture. If you folks would like to talk with us about your Medicare supplement plan in West Virginia, we'd be honored to talk with you about it. We work with all of the biggest companies in the area, or majority of them, I should say. And I'm going to put our number right here on the screen for you to call. We work with people in West Virginia, South Carolina, Florida, Texas, Utah, of course, Idaho, Colorado, Oregon, Washington, California, and soon to Alabama. Give us a call today. We'd love the opportunity to be able to talk with you. Thanks so much for watching this video. If you like these kind of videos and you want to see more of them, please let us know by hitting that like button. Subscribe for future Medicare content, and you have a great day. I'll talk with you next time.